Yo, what's going on, guys? Welcome back to the Stocks to Play channel where I'm giving you the hottest penny plays daily. So, man, we had a really crazy week last week in terms of like all of the bank plays, and then a lot of developing news. Things have been getting really crazy, so I'm gonna just jump on it. This is kind of like a really in-depth breakdown of what's to come, what happened, and how long we can expect this recovery to really take. I took about 2 days putting this video together for you guys. Not only for you guys, but I really wanted to get more in depth with everything and kind of understand and develop my own opinion going into next week and even the weeks ahead. So we're gonna dive right on into it and let's see what we got. So to even start, I'm just gonna start with if you guys are not joined up yet, I do have a paid WhatsApp group. It's $25 per month. Right now, we're currently at 19 members. The first 20 people will be charged 25 bucks a month. After that, the price will be going up, and the first 20 people also do receive one-on-one financial advice and attention. You are free to give me a call at any time. I will pick up, and we can break it down, and you can run through your portfolio with me, and I will try my best to help you. Let's see. So this is just some of the things we hit this week. As you can see, the conversations are starting to build up a bit as we've been growing the group. When we started this only about 3 weeks ago, and we're already at 19 members. Like I said, we have room for one more at 25 bucks. After that, the price will be going up. So we had over here, we had a guy named Z. I hit HUBC. Thanks for the alert. He was in at 140. He didn't say what he got out at, but that day was up in the 250s, 260s. I always be calling things throughout the day as well. Any thoughts about stepping in for the day? A few $100 on LYT for the day. I had let him know, nope, that's a no-go, not happening. They were delisting on Friday, and I actually gave him a different bankruptcy play, which was, I think it was APSU or something like that, because they're not delisting actually until March 31st. High risk play. Only put what you're willing to lose on plays like that. And then moving on here, we had another guy. He hit HUBC as well. Crazy play, bro. Thanks for the step-by-step help. My wife's gonna be really happy this week. Good to hear. One other person said, good to hear you're making profit. So 2 people actually hit that in the group. Another guy here, he was like, yeah, 9 out of 10 plays with you. I mean, people barely even talk in the group sometimes, so I don't even know if people are actually taking these plays, but he's like 9 out of 10 with him. He should go to the casino or something, because I'm calling way more plays than that. So he's picking and choosing pretty good. I didn't even do that well, 9 out of 10. Well, it's not even in just a week. It's over. Some plays take a little bit of time to play out. HYMC, gold mining stock, we called that yesterday. It ran about 14 or 15%, and I believe after the after hours. We had PACW. I hit this really hard. I had purchased it at 940, held it for one night, sold it the next day at 15 bucks. I could have got out at like 17, but I keep raising my stop losses as it goes up. So I still walked away with a very good return there. The guy was like, is it time to step in? I sent a voice message, and I was like, it is definitely not time to step in. I already know about these bank plays, and I'm really about to break that down for you guys right now, because I notice on YouTube, people are just, like, no one's really getting to the point. It's a lot of just news they're really covering, and I actually, like, for my own opinions, this is not financial advice. Keep that in mind, but we're gonna break it down. So let's keep it going here. We're gonna break down the bank stuff. It's a really in depth, and then at the end of it, I got a watch list, and then I'm also gonna be putting out like a private watch list to the guys in the group. And you guys expect, yeah, I know you guys want the entries, the stat losses, everything, and you guys will also get that in the group. But for now, I'm gonna run through what I've been working on for the past couple of days, and I also do have a whole bunch of stocks to watch in this video too if you stick through to the end. Keeping it going. Oh, so yeah, 19 participants. We literally have room for one more guy, 25 bucks a month, and then after that, the price will be raising to 35 bucks a month for the next 20 people after that. Okay, moving on. Stock market crash versus panic selling. The state of the banking sector at the moment. Let's see how this is gonna go. So the agenda right now, we're gonna look in at the latest updates in regards to the current bank crisis. So if you've been following me along, you know that after I made money on the bank stocks, I was gonna wait out until the weekend to see what new developments took place before I jumped into this play. So a lot has come out over the weekend, and I'm feeling like I'm more prepared going into next week. Okay, you'll see what I'm talking about. We'll also be looking into other sectors that are heating up due to these events. That's a big thing. We want to be ahead of the curve. We want to make sure that we're in position before everyone comes in. Will bank stock recover and how long? Oh, got a typo there. It's okay. Will these banks even be in business in the near future? Hot stocks for the next week. My watch list. So panic still continues. We know that aggressive moves by the federal government and Wall Street to calm these fears are intended to stave off wider crisis, but the possibility that other banks have similar problems has triggered a sell-off. Financial stocks as investors scrutinize bank solvency. This, in turn, stoked the public alarmed about the safety of deposits and the size of unrealized loss. So panic still continues. People are not trusting the banks. We know that, yeah, they cover up to $250,000, but they're saying that everyone will get all of their money. How long will that actually take? I couldn't tell you. It's going to be a process. If you guys know anything about anytime money is owed to you, it's always a hassle, man. Like, it's like, think about like lawsuits and going through all of that. Like, those things take years to settle and for you to finally get your money. So, like, yeah, these guys are going to get their money. Let's see. I want to know. I hope a lot of them have already been getting at least some of it. Like, the $250,000 is nothing compared to what a lot of them are holding. So let's see what happens for them. So what exactly is a failed bank? So when a bank can't manage obligations, a federal state agency will shut it down. The Federal Deposit Insurance Corporation, or FDIC, will become the receiver of the failed bank. The FDIC will make sure that the depositors get the insured deposit. So let's make one thing clear here, guys. Like FRC, people are seeing, oh, they got like $30 billion. Okay, what people are failing to realize, like, this money is not for the bank. This money is for the depositors. Like, they're coming to help out the depositors. Not like, yeah, it's helping the bank a little bit, but this is not for them to reconfigure a new plan and avoid this from happening again right now. No, this is just a bailout. This is for all the people that want their money back. SVB, for instance, found itself with $16 billion in unrealized losses from long-dated treasuries it held. As yields rose, it eroded the value of those bonds and created liquidity issues for the bank, long and favored of high-flying tech investors that could get financing in traditional institutions. SVB had to sell those bonds at a loss to meet obligations. Like, that's pretty self-explanatory. I'm sure you guys understand what I'm saying there. Over the last 10 years, there's only been 10 bank failures. Rates rose as the Federal Reserve battled an inflation surge that took prices to their highest levels in more than 40 years. Moody's, you guys know, like, they put out reports and whatever their opinions on situations. We'll talk about them a little bit later, like what they rated the whole banking sector right now. Said it expects the Fed to continue hiking. Yeah, we expect that, you know. Tech community impacted, hard rescue. So SVB is huge for startups and like small cap tech stocks, right? One thing to take into regards here, guys, on any of your plays that you're currently in, you should check if any of the money that they have was being held at SVB, okay? Because that can really take a turn for the worse in whatever play you're in. So even before I go buy a play right now, I'm checking that. I'm making sure that the company that I want to play is not working with SVB or has no money with SVB, you know? Okay. The FDIC insures up to $250,000, but according to the FDIC, they will be making sure depositors get back all of their money. We just spoke about that. The FDIC guaranteed SVB depositors, even those above $250,000, will get their money back, removing the regulatory limit. So, okay, sounds good. We'll see if that happens. The printing of so much money during COVID really had a lot to do with this whole situation. Now, let me explain this, because like I think people probably just think, yo, the bank failed, this and that. But if you listen back to like when I'm talking about the treasuries here, and how they didn't realize like they were losing. Well, they obviously realized they were losing, but this is because of inflation, and inflation really started during COVID, right? So everything has a chain reaction, and that's why you can't just look at one specific thing and think you're gonna figure it out. Like, it's not just the banks, right? Like this was a storm brewing up. It was bound to happen, and I have some very interesting stuff in here that it's gonna probably blow your mind. I'm gonna get to it. I'm gonna get to it slowly. So let's go back to 2020 for a second. Inflation started in goods affected by supply chain issues. Y'all remember like the Panama Canal out there. They had a boat stuck up there like a shipping container. That started a lot of stuff. Like these things have chain reactions. But okay, so chain pressures have eased over the summer for 12 months, ended in September 2022. Core service prices were up 6.7%, the fastest pace since 1982. Labor costs comprise more of the costs in services than in goods. The broadening of inflation to the service sector is a concern, as it may make it more difficult for the Federal Reserve to bring inflation back to target in a timely manner. No shit, okay? So this is what I was talking about here, the Panama flag ever given. That was the colossal container ship that was crashed into the bank in the Panama Canal back in March 2021. The blockage may have been only 6 days, but the Suez Canal held up more than 400 vessels, equivalent to nearly 60 billion of trade, causing an estimated 60-day shipping delay. Okay, chain reactions, guys, that's 60 billion. So that boat that was just stuck in that canal caused 400 boats to be stuck waiting in traffic in the canal. This is holding goods and all these things that need to get all across the world. It skyrocketed prices for everything. I mean, you don't see it happen instantly, but this happened pretty fast. Like it really, man, it was unfortunate. But these are the little things going back 2 years that attributed it to the banks making the moves they did and eventually fucking everything up. You know what I mean? The chain reactions, the economic disaster are extremely negative to our economy. It takes time to recoup losses and get back to normal, whatever normal is. Salaries in 2018, keep in mind, inflation, boom, whatever, things are going up, constantly going up. What used to cost you 200 bucks at the grocery is now gonna cost you like 300 bucks, but we know that. Salaries in 2018 was 20% more than today's salary. I see a problem there. Like, I'm sure you guys see it too. Like, you've probably been working somewhere forever. It's like you're getting a 2% increase, but annually, but things are going up by way more than 2% annually. The U.S. printed, I gotta double check that. I believe it was 15 trillion, but I just know it's in the trillions. Dollars in 2020. The more money you print, the more everything has to go up. Gas, houses, cost of goods, all went up. I live in Canada, Ontario. Like, our housing system is ridiculous. Like, ridiculous. Just go on Instagram and you'll see Toronto, the prices. You'll figure it out real quick. Okay, so we're gonna get into some interesting stuff here. Like, everyone wants to know, are these bank stocks gonna rebound? And I have a very good thesis about it. Market rebounded too quickly during COVID. That's another thing that attributes to this, and we're gonna still see problems that we thought were fixed just because the market was doing well, even through the pandemic, but they're not fixed, okay? So a year after COVID pandemic forced the nation into a shutdown, the stock market has been overhauled in ways Wall Street never imagined. So you catch Wall Street by surprise too, right? Last March, stocks plunged as the world faced frightening spread of virus. Many had thought that would never make waves to the United States. The S&P 500 lost more than 15% in a searing decline on March 11th and 12th. The index plummeted more than 30% by March 23rd. Perhaps even more surprising, the fall was the market rebound that followed. We know about this. If you were trading in these times, you couldn't miss, man. Like, you could have just been there, let me just pick this, boom. Like, you couldn't miss, you know what I'm saying? So that market rebound, powered by the twin booster engines of monetary and fiscal policy, including a rollout of programs from the Federal Reserve, the S&P 500 is up nearly 80% from the low that March and just hit a fresh record on Thursday. Keep in mind, this is back during like COVID times, right? Like when it took a real hit. When the economy began to reopen, money moved into recovery themed stocks, including energy, industrial materials, and financials. Not no financials right now. These sectors now lead the market displacing high-flying tech shares after years of steadily growing the economy. Pandemic resulted in a shocking decline in gross domestic product. A sharp rebound followed, aided by easy monetary policy and blast of fiscal spending. The economy did not match up to the stock market. Like, it was booming. Like, I remember those times. I made the most money in those times. Like, it was not, it just didn't match, you know? It really, really didn't match. And you know what really attributed to a lot of this was like those stimulus checks, and then so many people being at home, and the younger guys like us, like, well, like I've been into trading for about 7 years, but we experienced the inflow of a lot of new traders, right? A lot. Okay, so new investors. During that year, a new cohort of retail investors, many using no-fee online trading platforms, became an important part of the market. We know that. Everybody and their mother was a day trader at this point, and everyone thought they knew what they were doing. Like, if you were trading before COVID and you learned a lot, during COVID, you really capitalized. Like, COVID made people think they were good traders, and then when the markets turned, they probably went back to their job. You know what I mean? Anyway, Goldman Sachs expects households to be the biggest source of demands for stocks this year, with 350 billion to flow into the market, compared with 300 billion from the corporation. It's a newer and younger investors who are embracing speculation like never before, as evidenced by call options volumes that are multiples of prior years' record volumes. So we know that, and we're still seeing that today. It's not going to change. Tons of new investors came in, money was given out like crazy, and people were investing, right? So we like that. The volatility is what we need. We love that. Moving on, money is going to be moved around due to the bank crisis. So in the recession 2008, 2009, there was still money to be made if you knew where to put it. COVID, there was money to be made if you knew where to put it. And what COVID was a little easier. 2008, 2009 was a little bit trickier. So right now we're gonna, like, we want to find out where we're gonna put our money next, and I'm gonna get to that in a little bit, right? The reason why we rebounded from COVID so fast in the market was due to substantial amounts of money was being moved into new sectors, new stocks. Also, many new investors entered the game. Stimulus, we know that. Lots of money can be made. Also, lots of money could be lost if investors do not shift their investments in time or into the right sectors. The same thing is going to be happening right now during this bank crisis. So where do we start? Keeping in mind where I'm starting, nothing makes a stock move faster up or down than institutional investors. We know that. So follow the money. You know what I mean? Follow the money. Moving on. Moody's cut outlook on U.S. banking system to negative, citing rapidly deteriorating operating environment. So there was talks. They were talking about FRC, and they put the rating to junk, and then they're like, you know what? We're not gonna just get burned with this, and they just put the whole sector. They just labeled it as junk. Like, that's what they believe. So this is my points here. I have my own opinions for my own opinions, and I'm confident with my trades because I'm doing the due diligence. I'm risk managing. This is not financial advice by any means. Develop your own theory, thesis, whatever, and just take what I have to say and incorporate it, right? So what? They stepped in and gave FRC 30 billion. This is for depositors, not for the bank. Big difference. Do we really believe they can continue to bail out every bank that collapsed? I hate to say this, but there's 34 other banks that are worse off with worse balance sheets than SVB, and they have not collapsed yet or publicly yet. Like, people do not know. I was running through balance sheets since yesterday, checking out a lot of these banks, and you guys will see what I'm saying. Moody has never downgraded a whole sector at once like this. If you know they have, drop something in the comment, because I can't recall the last time this has happened. Like, I really can't recall the last time this has happened, you know? Even through 2008, 9/11, never. They didn't deem a whole sector junk like that. You still confident about this? Just because FRC received 30 billion, things will just rebound? The bank, the way I'm looking at it is people are thinking, oh, FRC is getting 30 billion. It's gonna pop again. Understand this, man. Like, their business like whoever was running the business there and running risk management there, they fucked up, man. Like they seriously fucked up. I, as an investor, I wouldn't go to FRC now and give them any money. So what? They can mess it up again? Like, you've lost credibility with me. So for everyone out there thinking that, oh, they're getting $30 billion, everything's going to go back to normal, it's too late for that. Like, it doesn't mean anything anymore, because all this is showing me is that other banks are going to fail and expect to be bailed out. And eventually we're going to hit a point where they're going to say, yo, we can't bail anybody else out no more. You know, like we can't. Moody's Investor Service Cut, it's a view on the entire banking system to negative from stable. The big three rating firms cited a rapidly deteriorating operating environment despite regulators' efforts to shore up the industry. They can't save every bank. They will have to say no. The firm noted that an extended period of low rates combined with COVID pandemic-related fiscal and monetary stimulus have complicated bank operations. See, COVID pandemic-related fiscal. I was already looking into that before I even came across their article. I already knew, like, it was because of COVID, inflation, and all of that crap that this is what caused this crisis. Like, I remember when that boat was actually stuck. Like, I was very wrapped up with the news on that because, like, it was very intriguing, and I knew, like, the chain reaction that it would cause. It's crazy. It's actually crazy. So remember how I was saying there's 34 other banks that are doing worse than SVB? Well, here they are. This, I actually have to screenshot this off a YouTube video because I could not find the chart anywhere for my life, but I could still read some of them here. But this is just to say, every bank to the right of this arrow, their balance sheet is worse off than SVB. And to the left, it's better. So the first one there is JP Morgan, then you got the Bank of America. Wells Fargo's the fourth. So those are still doing typically well, right? To the all the way down to this side here, you got like HSBC, you got City National Bank, Bank of the West. There's a ton. There's 34 other ones that are not included. I mean, sorry, there's a good bit here, but there's more than this. But this is just the tip of the iceberg. Like, everyone thinks it's just SVB. Bro, every bank to the right of this arrow has a worse balance sheet than SVB. Do you think this is over? Do you feel confident to go and throw your money back into FRC just because they got some money getting bailed out? Like, I don't know about you. I don't. I'm a day trader, not a long-term trader, but that, like, so it's a little bit different for me. So like scalping, I will be looking into that, but not right now. I am not risking all that right now. Like, I let this play out after I hit it big on Monday, and I'm waiting for tomorrow morning to really see. Pre-market's going to be very important. There's been a lot of developments over this weekend. CS, that's the creditor one, they're getting bought out by, who are they getting bought out by? I think it was UBS, yeah. UBS to buy out Credit Suisse for $2 billion. Speaking of that, CS, just based on that, $2 billion there, like, CS, I wouldn't be surprised, guys, if tomorrow you wake up and that's trading at like 50 cents or below 50 cents. I would not be surprised, okay? UBS is a stock you can keep your eye on. I'm a little concerned with this right now because, like, UBS taking over or buying them out. What's going to happen when UBS needs bailing or buying out? Because it's not like they had the money. They got the money from Swiss, the Swiss bank. Like, they worked out some sort of deal there. Like, this seems like a hole that's getting dug deeper and deeper and deeper, you know? But yeah, keeping this in mind here, guys, there's banks out there doing worse than SVB. And they have not came crashing down like that yet. And a lot of their stocks are already crashing down, and they haven't even put out any news regarding how bad their companies are doing. So we can see lows that we haven't even seen before for these stocks, you know, like we really and truly can. Moving on, 153 billion borrowed from the Federal Reserves. That's a lot of money. I'm just going to read this here. Another bank that has taken out significant FHLB loans in San Francisco is Western Alliance. Shares of the regional bank were also tumultuous this week. Tumultuous this week. Tumultuous. There we go. There we go. Tramping, man. This week ended Friday down more than 15%. That doesn't mean that banks taking money from the FHLB and participating in the Federal Reserve's emergency bank term lending program, which lent out $12 billion to banks this week, are in big trouble. There's nothing wrong with using lenders of last resort tools to deal with overheating economy, wrote Bank of America's economist Ethan Harris and Shruti Mishra on Friday. Like, see, they have to say that. They're gonna say that. They're gonna have to say that. I'm trying to make money and not get burned. Moving along. But it does raise red flags. See, like the way that they put things is like this and that. They're always like, man, they don't know what to say. They just covering their asses at this point. I don't work for these companies. I don't care, bro. I'm gonna keep it real. I'm gonna keep it 100. I'm gonna tell it how it is. I'm gonna say how I feel, you know? There's been a sharp increase in borrowing from the Fed's discount window to $153 billion from $5 billion just last Wednesday. Do you see that, man? $153 billion from $5 billion. That's big. Like, that's huge. That's the largest amount of borrowing on record. Yeah, no shit. Like, you didn't even have to tell me that. I could have probably guessed that. The sharpest increase in banks' emergency borrowing from the Fed's discount window speaks to the funding and liquidity strains on banks, driven by weakening depositor confidence following one bank window down and 2 bank failures, wrote Moody's analysis last week. The data, they said, is in line with Moody's negative outlook on the U.S. banking system. So they got a negative outlook on the banking system. We know that. They put the whole sector down to junk. There has been borrowing of $153 billion since last Wednesday, which is the largest amount of borrowing on record. It's not looking good, man. It's not looking good right now for the banking sector. Like, they're beating it up, and the news coming out every 15, 20 minutes is a new article coming out to slander this, bro. Like, to really slander it. Like, man, but numbers don't lie, right? That's why, like, on that chart, that this one here, numbers don't lie. These companies are legitimately doing worse than SVB, legitimately, you know. Okay, FRC, PACW, SVB, how long to recover? Well, SVB, that's like done. It's over, right? I don't even know why I still put that there, to be honest. Potential sectors and place to move your money into. Okay, first, before I get to FRC, PACW, and the bank stocks recovering, I'm just gonna briefly get into this a little bit. So, for the guys and girls in our WhatsApp group, I will be sending you guys a detailed list with supports and entries and much more plays than this. But for everybody else, I'm still gonna give you some direction. So, gold and silver has been going up. Bitcoin's been rocketing. Crypto itself is doing well. When I say crypto here, I'm not talking about me personally going to invest into Bitcoin and things like that. I've already had my fun with Bitcoin and crypto and stuff. We were in on that back in 2014. I don't think I can go back and make now what I already made back then, bought in 2014 and held that shit for 7-8 years. So I'm not, and crypto is not really my thing. There's not real data behind anything for me. Historical data is irrelevant. Like, Bitcoin, I like Bitcoin and I like Ethereum. Those are the only 2 coins that I like, and Cardano. But I'm not in any of them by any means, but I do. When crypto starts running, I take a look at like the crypto mining stocks and things like that. There is stocks out there that are blockchain related, and they are very good potential plays, especially when the cryptocurrency sector is picking up. So when banking is looking like this, people are going to want to move their money. Where they're moving their money to is what we have to figure out, and this is how we're going to kill it, right? So gold and silver, people love physical assets. Gold and silver has been around since the fur trade days. You can never go wrong with gold and silver, right? So gold, silver, crypto mining stock, HYMC, we actually got that in. We made some money on that already. I still will be looking hard at it next week, and I'm still holding some there. Coin, which is Coinbase, it's been having a great week as well. Riot is also having a great week as well. Those are all crypto related stocks. Then we have CLSK and MARA. QUYF, which is on the OTC, and then FSM. You guys can check all this out. I'll do another video with a breakdown and technical chart analysis with these stocks a little bit later on, maybe by tonight or so. We also got communications and the technology sector. So even during like the recession, like communication, still there was a lot of plays that ran significantly in that time, and a lot technology, biotechs, and things like that. They can still run significantly. Like there's just right now a lot of attention is off of it because the volatility has headed towards the bank sector right now, but things will cool off. The day traders will come back to their breadwinners, which is the biotechs, you know. So we're not too worried about that. Another play that has a lot of potential is CTMX. So I've been following that for a good bit. I'm going to do a more in-depth breakdown about that, but I'm just giving you guys tickers to check out. Make sure you do your own DD. And remember, this is not financial advice, even though we are very successful over here. It's because we manage our risk. We do not call it right all the time, but I manage my risk correctly every single time. Trades we are still playing aside from the crisis, still in SVB, still in VS, and ASPU, which is the bankruptcy play. SVB actually came out with some very good earnings. I think revenue was up over 400%. We know the routine. Most times stocks just drop on earnings. Fortunately for me, I played SVB 4 times now. This is the first time that I'm down on it, and I'm not down on it a lot at all because I know how to manage my risk, you know. Believe it or not, I actually reduced my position, was it 4 days ago. So like a day before the earnings came out, I cut my position at half just because there was, I didn't want to be going into the weekend holding too many things in such market conditions. Yo, you really got to think about things, you know, like think about all these guys who are chasing FRC and PACW and all of that. Like that thing's at 19 bucks now, man. Like you're going to wake up Monday pissed off, you know? So like you're in control of what you're in control of. And whatever you have control of, you should do your best to control, because the markets we don't have control of like that, you know? So play it safe. There's always opportunity out there, so don't feel like you're missing things, because you keep rushing things, especially in a market like this right now, man. You'll wipe your whole account. You're gonna have to go back to work for 6 months just to save up some bread to come back and trade. Do not wipe your accounts out. If you join my group, you will definitely not wipe your account out, because I'm in your head, bro. I am in there telling you guys, take profits, don't be greedy, don't trade on emotions. I'm telling you what I'm getting out. Like, yo, them gains add up. I do this full time, them gains add up, you know? So anyway, I'm gonna move over now. That was the end of that. 1 second here. One sec. New screen recording. There. Boom. Okay. So right now we're looking at let's look at PACW, because everyone wants to know, when are these gonna bounce? When are they gonna recover? So let me break this down for you. My opinion, not financial advice, but hey, take it with a grain of salt and let's get it. So this right here is PACW. PACW was trading at 61 bucks before the crash in 2008. This is the crash right here. Had a rebound just like we had a rebound on the bank stocks. What happened? Came back down, lower lows than the initial bounce of the rebound. We are probably going to see that this week. We really might see under 5 bucks on PACW. If it does anything like how it did here, we should, you know, because we've already broken. That was like the support from 2008. We dropped down below that now. So, and that's only at 928, and we had hit 5 bucks before. Anyway, moving on. Many of these bank stocks will not be returning to their highs prior to the SVB collapse. Not anytime soon or never again. depending. I do believe when things settle, they will head back in an upward direction, but the original highs are not my price targets. At this current state, if a full-blown recession takes place in the near future, we can expect a longer recovery than in 2008. So, the recovery time, if we get a recession, which they're calling for, it's going to be longer than when we had the recession in 2008. And this is what happened. The recovery from 2008 had an immediate bounce, just like we saw last Monday, but did not really start to rebound and hold its gains until 2011. And even then, it did not go back to its all-time highs up here at 64. It did not, man. And that took 2008, 9, 10, 11. 3 years, and it did not go back to what it was trading at previously, the highs. So what was next? COVID. COVID hit. It was currently trading at 57. Still never touched back to the highs. It wasn't that far away, but it did not. And then COVID hit. Boom. Came back down as low as 1377. Okay. COVID, it recovered a lot quicker. So the COVID crash, it recovered in about 7 months, but once again, was not going back to trade to its previous highs. So it didn't go back to trade of its previous highs after the recession, and it didn't go back. Obviously, if it didn't go back to after the recession, it couldn't have gone back to the previous highs before. And that's what I'm really trying to instill in people. These price targets and saying, oh, it's got to go back to this and it's got to go back to this. Nah, man, the economic state is different. It's changed. Not to mention, this collapse with the financial sector is still mixed with the aftermath of COVID. Like, this is a double banger. You got to really think about it like that. Like, the recovery time for this right now, man, oh my God. If the recession doesn't get as bad as 2008, 2009, because, they claim we had a recession a little bit last year, and we're always in a recession the way they be talking, right? Ooh. But anyway, we're all... One second. Yeah. So yeah, if we could get through without like severely taking a hit on the SPY first of all, or a 2008, 2009 type recession, it will recover faster than 3 years by far. Okay. Will it go back to its original highs? I really doubt it. And if it does, it's because of all of the new investors and the new volatility trading it, that would send it up, and it will come back down a little bit and maybe go back to trading somewhere. I'm saying, like, for PACW, man, like, right now, to me, $20 is a good price target for that stock. Like, really and truly, this $30 thing, and $50, like, nah, man, it's not time yet. Like, after the recession 2008, 2009, it couldn't recover back to those prices, So right now, what we got to really hope for, bro, is that we do not go into another recession, because that would be a bad storm. But anyway, moving on, we're going to check out BAC. So Bank of America. This is interesting. This is an interesting one. So Bank of America, this thing went from $55 all the way down to $2.50 in that $2.47 in that 2009 recession. Oh my God, that's crazy. And 2009 up to 2023, it never traded back as high that it was trading before the recession. Okay. Like that's crazy. That's unreal. It's been so long after that, and just when it was getting close there, man, it came back down. Fortunately, this one, it did not drop as bad as the majority of the banks dropped, but it still came down a decent bit. But the thing with this one is, like, man, like, I can't believe all these years after the recession, it did not make it back to its highs. And like, COVID came, it hit that too. Now this is COVID right around here. It went from 35 back down to 17, and then it bounced. You know, if, like I said, if we don't take a real hit with like another big economic disaster, the Bank of America could actually return back to its highs that it was trading at prior to the first recession. And the reason I say that is because it's having more of a organic run up, and it's getting just beat down because of the bad luck with the banking sector here. You know, really and truly, this one took one of the lesser hits from the price that it was trading at. Still 50%, but it did not come down to $2 like it didn't. If it came down to like $7, $8, $9, I would say like, yeah, it's never going back to those highs again. But in this case here, considering like if you look at PACW, like it's seen these lows before, it's really seen them, but now it's seeing lower lows. BAC, Bank of America, the lowest it's seen was 247. To be trading at $27 is not a bad sign, considering how disastrous this thing is going right now. We're gonna check out JP Morgan, because yo, this was the one on that list that I showed on the PowerPoint that is number one, and it's still doing its thing. It's doing good. When this happened, they went from 173 down to just under $100 here, and it's back up now to 150 something, I believe. Hold on, let me see on the Yahoo here, because the after hours, what was it? Okay, yeah, so it's back up to 125. So we know JP Morgan, like their balance sheet's actually good. They're actually doing really well. They're one of those stronger banks out there. So JP Morgan is looking like it held through the disaster. It really did, man. Like, yeah, it dropped about $70, but it's getting back up there. JP Morgan has had consistent growth. So like even when the recession hit, for these guys, this is it right around here. Their range was a lot smaller of trading price range than a lot of the other bank stocks. So let's say JP Morgan, which has taken a hit, but nowhere near as bad as the other banks plays, as even through 2008 crash, it took them 7 years to return to its previous highs. It still took 7 years, because look, this is 2008 here, right? Before it was trading at 67 bucks. 2008, right? How long did it take to get back to 67 bucks? It got to it over here. That's all the way in 2016, bro. 2016. That's a long time, guys. You see? Like when recessions hit, it's a different kind of fuck up, yo. Like it's a different kind. Right now, like we can get away with catching some bounces and still making money and potentially heading back up in that direction for a little bit, because I'm telling you, things are going to come down. I just don't know when. I don't have a crystal ball, but 7 years, and this company it's great. Like JP Morgan, we all know them. But anyway, once they got back to that high, it broke out. It broke out for several years. It broke out until COVID, and even that, it recouped COVID very quickly. JP is okay. I have a side note here that I just wanted to mention a little bit. A special type of downturn usually follows a financial crisis. Economists call it a balance sheet recession. In a balance sheet recession, sectors of the company are struck with bad assets from a collapsed bubble. We know what they're talking about, right? They are primarily means of avoiding bankruptcy is to sell, pay down, or otherwise dispose of those assets. The focus on reducing asset holdings makes that new borrowing grind to a halt. And low interest rates have limited effectiveness in stimulating growth. Recoveries from balance sheet recessions hampered by debt pay down are slow, weak, disappointing, and painful. The U.S. was stuck in this type of deleveraging well in the 2010s. Europe was until recently, and Japan has arguably been in it since 1990. This is what I'm talking about. Like, the balance sheet recession. That's why it took 7 years for JP Morgan just to get back to what they were trading at. Fortunately, they got back there because Bank of America didn't, PACW didn't, and there's plenty of others that didn't. You know, I can't go through all of them right now, but I mean, drop a comment on tickers that you would like me to go through, and I will give you guys the best I got, you know? But moving on, like, yeah, some of the stocks I mentioned, you know what, I'll do a better video for the tickers to watch out for. Just make sure you guys go do your own DD as well. And guys in the group, don't worry, I got you guys tonight. It's early still. I'm gonna hit you guys with the watch list and the real tickers to watch out for, and the entries we're looking for, the support levels, and the catalyst DD while we're playing them. But we'll take a look at CTMX quick, just because I had mentioned it to a lot of people in the group, and I just want to check on this quick. So yo, I had mentioned this in my group chat, or maybe I was telling people about it a couple weeks ago, but didn't mention it until, was it Thursday or Friday? We didn't take a position yet, but long story short, CTMX, they have huge deals with Moderna, somewhere 30 million, possibly to the billions of dollars. They have another huge deal with another company, and more effective than all that, the chart, like, you know, we're chart guys out here. This is when, like, they announced the deal with Moderna, I believe, or the other company, and then it had a stupid rocket up. Stupid. Like, this was trading at what, $1.44 a couple days before, and then a couple months before, and then in January it decided to go pop, and it went all the way up to $3, and then it's slowly been downtrending. It's sloping though. It's not like it's just crashing. I always say this in my group chat. You guys know I always say this. Things like to come down and fill the gap. So it looks like it's came down. Yeah, and filled that gap. I watched it on Friday. It actually went as low as, I think, 184 or 182. The only reason I didn't pick this thing up yet is because they have earnings dropping next week. And man, you know how earnings goes. Even with great earnings, things, I don't know. I just don't know what it is. So I'm gonna just keep my eye on it. We know it could run on news. We know that the news that it initially ran off is still playing out, and we're gonna get more PR about it, and we're gonna get some of the numbers behind it as well. We're expecting eventually in the near future. So this thing came down, filled the gap. Just keep it in mind, CTMX. I think it's gonna be a big play, because even like I go on StockTwits, I don't listen to anybody on StockTwits, but you can see the sentiment on StockTwits, and a lot of people that are following other tickers keep mentioning CTMX. So yeah, keep that in mind, guys. But all in all, I think this week, make sure you're keeping some of your keep a position in cash, because opportunities do arise, and you don't want to be panicking here or have to sell on one play that you really think have potential just to jump in on something. But also don't chase, guys. Really and truly do not chase. Anyway, if you want to get in our group, I'm going to leave a link to our PayPal. So you just click that link, you make your payment, and then a link will be sent to you for you to join the WhatsApp group. Like, comment, subscribe. It really goes a long way and keeps me motivated to be doing these videos for you guys. And for the guys in my group, give me until about like 9 o'clock the latest, and you'll have your watch list. But also the same tickers that I mentioned in the PowerPoint, you could go look those ones up as well. Let's get it, guys. Sayonara, guys. Take care. Adios.